everyone, welcome back to the channel, your number one source for income-oriented investing. It's time for portfolio update, portfolio unveil number 40. It's your favorite video where I unveil my entire portfolio from A to Z. So what you're looking at now, of course, in case you're new to the channel here, this is my passive dashboard, which literally connects to all 6 of our investing accounts. So the grand total, all the values of the accounts put together is just over 1.6 million Canadian. This is in Canadian dollars. So 1.6 million. So of course, fresh record, right? We're hitting records every single month. The stock market is doing really, really well. So I did have a particular request for people to look at my reporting tab where you could actually see the rate of return. Just a disclaimer here, guys, I'm not sure how accurate this rate of return is or how it's being calculated, but here it is on the side. For the 1 year, it's 27. For year to date, 19.37. And the all-time seems a little bit high to me, 34.79. Just remember that the all-time for me, the starting date, is when I actually moved everything over to Questrade, which is in April of 2022. So you guys requested it, so I'm showing it here. And in case you don't have Passive, they're the sponsor of this video, of this monthly series, a good friend of the channel, which I really appreciate, guys. Get Passive. This is the portfolio management tool that I use. It's very convenient. You could group all your accounts together. There's all kinds of other features as well. And guess what? There is a free version, guys. Free version, so you could just try it out for free. You got nothing to lose. And if you use Questrade in Canada like I do as a broker, you get the elite membership, which is normally $99 a year, absolutely free. But I do have a 25% coupon code, a 50% off coupon code if you want to try the elite membership. And you don't have Questrade, you could try it out for half price, for $50. Just make sure you click on my referral code in the video description below. So this is the grand total, everyone. So as usual, what we'll do is we'll break it down in Excel, which is much easier to digest. And of course, remember, you could download my Excel file absolutely free on my website, passiveincomeinvesting.ca. Just go to free tools and resources, and it will be the very first download. So as most of you know, but in case you're new, I really consider that I have 2 entities: the retirement account. So of course, this grand total is in Canadian dollars, all 6 investing accounts. I have 6 investing accounts, 3 of which fall under the retirement accounts umbrella entity number 1, which, on 1.6 whatever million, it's about 36%. So of course, the retirement accounts, it's my RSP, my wife's RSP, and a very small locked-in RSP, a small lira. And in terms of the main portfolio, which is about 65% of the overall total here, it's our 2 TFSAs and our joint cash account, or our joint non-registered, regular account. So let's go through the Excel file together, guys. If it's too small, I strongly suggest to download it. You could follow along. I made it, really making it as big as possible here. So the retirement accounts, all on drip. Very, very simple accounts, doing really well. I only have 1 holding in my account. It's the Roundhill Innovation 100 0 DTE Covered Call ETF, which basically, is on a drip. So everything in the retirement accounts, guys, by the way, everything in these 3 accounts, these 3 accounts are on drip. The dividends are being automatically reinvested every single week or every single month. So QDTE doing really well, guys. It's still outperforming QQQ and QQQM. I couldn't be happier with that. I laugh every time I see a covered call ETF that has no leverage outperform the actual index. It's absolutely hilarious to me. I mean, Brownhill seems to have found the holy grail, and obviously I really like it. They have XDT as well for the S&P 500. They also have an RDT for the Russell 2000, but you guys know that the NASDAQ 100 is my preferred index when it comes to the retirement accounts, which, very, very long term. Not sure when I'm going to be using them. So, just all I do, since it's on drip, I don't really calculate or track my average cost base because it would be too annoying to do so. I just literally track the number of shares I have, which is 47.89. And by the way, the annual dividend, I just put 16.64. I'm just eyeballing it, that I'm basing it on an average weekly dividend of 32 cents. Of course, the last one was a lot lower, 19 cents. The ones previous were a lot higher. So I will just automatically adjust looking at it, and maybe I'll lower it to 30 cents at one point, but I'm just eyeballing an average because it changes every week, so it's very, it's pretty annoying to track. So my wife's account, Erica's RSP, main equity position is sorry about that, their links, their hyperlinks is QDT as well, but there's also some SVOL, which is my other position, alternative income ETF position. I really like SVOL. It's getting quite boring because it has a lot of fixed income in there, but SVOL is just doing great, stable capital, 15-16% yield. And of course there's RIV as well, which my plan is once it hits $55,000 in value to swap it into SVOL. And then I have my locked-in RSP, my small pension that I got from Air Canada. I just put it in Bitcoin, and I went with Maxi from Simplify. So if you look at the actual numbers, I just want to show you that everything I'm showing you is real. So if you click on my RSP, you see that the total value is $273,499. I'll just refresh it because I am filming this, by the way, on September 24th while the market is live. So you see 47.89 shares, 273. So that's where I put the number here, right? 273, 74.89. And if you're dripping your account, you're reinvesting everything, it's very easy to figure out your total return if nothing's coming out. How much did you actually contribute to this retirement account throughout all the years? This is since I was 18. Obviously, I haven't been managing my own money since I was 18, but that's just how much money I put in myself into the RSP and how much it's worth now, which is 273, which you could see I just get this value here, which just automatically converts the 203,000 USD to whatever the Canadian amount is. So as you could see, I have been tracking the monthly amounts. They've been steadily going up over time. This is just, it's just going to do, the QDT is pretty much just going to do what the NASDAQ 100 does, guys, but it's just on compounding every single week, which is fantastic. So every week I go in and just update the number of shares that I have. And remember that this initially was a $180,000 investment, and it is now worth around $203,000 USD. So obviously it's doing really well. Here's my wife's RSP in case you don't believe me. So you see some QDTE RIV doing really well. It's actually steadily going up and up and up. I'm actually only $5,200 away from that 55,000, and then I will swap it into SVOL. You see the units here and the value 271, and you see here that's where this 271 comes from. Again, steadily going up every single month, and I expect that to keep going, the trend to continue, right? Obviously, if the market crashes, it's going to go down, but hey, still compounding, which is just fantastic. And then you have a little bit in Maxi here. That's my little leftover pension from Air Canada. So it was 50% match. So I didn't really care about this. I said, you know what, I'll go all in on Bitcoin, and right now the total value is 42,000 Canadian. 33,000 went into this account. So obviously I'm up $9,000. So I'm doing well. Okay. And this is also compounding monthly. So that is it in terms of the retirement accounts. Very simple, very boring, very basic, just on drip, everything compounding away. RIV eventually, once it hits 55K, will be swapped into SVOL. So basically in terms of core positions, I'll just have two, a QDTE and SVOL. Will that remain the same forever? I don't know. Maybe YMAX seems a little bit more interesting now, because not only has the yield max strategy changed where they could do call spreads, see my latest video with Jay where we talk about that, but YMAX also is going to weekly distributions. SVOL, solid, but a little bit boring. I don't mind taking a little bit more risk, but anyway, we'll see. I'm just saying that maybe it's a possibility. I could see myself maybe swapping the SVOL back into YMAX. We'll see what happens. So that is basically the retirement accounts, guys, right here, which make up, about 36% or so. I just took this amount, 587,000, which is the combined value of these three accounts, and just divided it by the total amount. And just so you see that I am doing it live here, I'll refresh it because you see the market's open and you see the amount adjusted a little bit. Now it's time to move on to the main portfolio right here, guys, which has a total value, brand new record of over $1 million, $1,043,000 here. So if you go to the main portfolio tab, this is the main portfolio. So again, it's a combination of our two TFSA accounts and our non-registered joint cash account. You see the total value right now is $1,043,000, and that's why I have $1,040,000 here. So I'm actually up capital-wise, only capital-wise, guys. 2.77%. I haven't been up capital-wise in a really long time. Doesn't really matter to me. This changes every day. But just to say, not only am I making an average yield of 13.54% now, I'm also up in capital. So obviously I'm very, very, very happy with this portfolio. And I call it the main portfolio because this main portfolio is really kind of what I live off of in case I need it. It's not on drip. That's really the difference between these three accounts and the retirement account. So before we move on, I just want to shout out a quick reminder that if you want to follow my main portfolio live every single day, download the Blossom app and follow me. It's a really cool social investing app where you could upload your portfolio, follow others, etc., etc. Please download this mobile app. It's really, really cool. There is a download link in the video description below. So follow my portfolio. I'm just about to hit 30,000 followers on that app. So please, guys, download it and follow me. I would really, really appreciate it. They're also expanding in the US as well. So you could download the app. It's for not only Canadians, but Americans as well. So time to go over the main portfolio. Of course, the first thing we're gonna look at is what changes have I done in September. Quite a bit, nothing too crazy. So if you go in the main portfolio tracker, this is where I actually track and show you guys every single move that I make, everything I buy, everything I sell, and if there's a capital loss or capital gain on the stuff I do. So the first thing I did is I wanted to get into the new Evolve Utilities Fund. And you know, obviously you could see here that it's a new holding. I have 20,000 worth, but I didn't have 20,000 lying around. So I figure I trim a little bit my other two main Canadian exposures, bank and ENCL, to get a little bit of UTES, which is a great complement. So now these three are really my Canadian, you could say, exposures, which combined is about, you know, I expect to keep between 15 and 20% of the portfolio. And most of it is in our TFSAs because it's just more tax efficient that way. I don't want to get into the details of tax efficiency because I am a non-resident of Canada. So my tax situation is a bit different from yours if you're in Canada. Basically, I want to keep most of my Canadian exposure as much as possible in the TFSAs, not in the non-registered account. But that's just for me. So what I did is I basically trimmed $10,000 off bank, which actually bank is up. It's doing well. I made a $697 capital gain and a little bit of a $5,000 trim off ENCL, which got me a very small capital loss of $220. That was fine. And another thing I did is I did a big trim of the Ethereum ETF. So you guys know this is my biggest loser in terms of investment is ETHY, which is an Ethereum covered call ETF from Purpose. So I did trim $8,000 of that, and unfortunately did realize a $2,307 capital loss. So with all these trimmings, I unlocked about 20 grand to put into UTES. Just another side note of ETHY. Another reason why I trimmed it, you'll see, you know, I was at $25,000. Now I'm at $17,000. Is because I did have my ETHY was split between my TFSA and a non-registered account. So I literally sold off all the ETHY in my TFSA. So I have to admit, you could see here, by the way, this is what I have in my TFSA. You could pause if you want. This is what my wife has in her TFSA. And this is what we have in our joint account. I know it's not really clear in the Excel file. It only shows, you know, total amount of shares. But if you actually unhide every single column here, you'll see actually the total shares, but how much of those total shares are split between the TFSA and the non-registered account, as well as other tax information. So I just wanted to point that out. But I showed it to you in passive. You could just pause it as well. But you know, if you unlock all the columns, there's other hidden columns here as well. A little bit more details on each fund, but I basically hide the columns so it all fits in one page. So I could, you know, show you guys. You could see everything in basically one page. Even the annual, close that. There you go. So just an FYI. So yeah, basically I had the ETHY in my TFSA. I no longer have it. This was a mistake to put something a little bit more risky. Well, I don't know if it really was a mistake. It was an oversight. I shouldn't have put any ETHY in my TFSA because TFSA room is very, very precious, especially to me as a non-resident. I don't get any more as the years go on as a non-resident. But now you could see that I have no more ETHY in my TFSA. I do have a little bit left. The portion that's left, which is 3,600 shares, is all in my non-registered account now. So it makes me feel better. I'm happy, and I see myself, you know, trimming ETHY maybe a little bit more down the line when it's closer to breaking even, to maybe 15,000 and eventually 10,000. Maybe I'll just keep 10,000 and that's it. But yeah, definitely the biggest loser, I would say, in my portfolio. But I actually went back and calculated, all the capital losses that I've made trimming ETHY, which you see here. I trimmed a little bit. I made 1676 capital loss. I trimmed a little bit more here, only $456. I trimmed, obviously, recently, 2307. I actually calculated all the income I got from ETHY. I'm pretty much broken even in terms of realized capital gains or losses. Of course, if I sell off the entire amount now, I would be at an overall negative return, but I'm not doing that yet. Hopefully you guys know what I'm talking about here. So yeah, new addition, guys, to the portfolio, UTES. So now, bank also, I 120,000 investment. It was a little bit much. I feel better now. It's only making up under 11% of my portfolio. So these three are basically going to be my Canadian exposures. The rest are pretty much going to be American exposures, which is really what I want to focus on. And of course, you guys know that if you take everything into account, the RSPs as well, the RSPs are entirely American exposure. So overall, I probably have like something like 85% US or more, 85 to 90, and only 10% exposure to Canada. So let's go through the portfolio, guys. So as you know, I have my main core diversified funds. I consider these my core positions. HYLD, USCL, which are basically more or less, HYLD is more or less the S&P 500 with covered calls. That's why you see S&P 500 in quotes here. But USCL is actually the S&P 500 with covered calls. And then you have QQCL, which is a NASDAQ 100 with covered calls. All of them use 25% leverage. You can see these are really my main core positions. And GDV, 100,000 in here, which is doing really, really well. It's trading at a discount. Actually, a good time to pick some up. I have a Q&A coming up with the people at Brompton, Michelle and Chris, to talk about the great opportunity there are in split funds. But GDV is really the only split fund I think I'm going to own eventually. Just before I continue, I didn't finish what I actually bought that month. So you know what I did in terms of buying and in terms of selling. I trimmed bank a bit, trimmed the NCL a bit, trimmed ETHY a bit, and I bought UTES. But in terms of what I bought for the whole month, obviously 20K of UTES, but I also added $10,000 to QQCL prime position. I did add $2,000 into another new position, NVHE, which is a single stock leverage covered call ETF from Harvest that has very, very high yield that focuses on NVIDIA. And at one point, even earlier in the month, I had even bought some ETHY to average it down a little bit, by the way. And I also added a little bit more to Happy T, which is the basically TLT with covered calls. So you see that here. Sorry, wrong one. So you see that Happy T is now at 15%, just under 1.5% exposure. I was pretty much disappointed like the rest of you. I thought the big rate cut would make TLT pop, but it didn't. I guess this kind of thing takes time. But, 1.48% here. Added a little bit more there. It's doing completely fine. The price is over my book value here of 1104 and obviously making a phenomenal yield of 16%. UTES added it. They declared their first distribution. That's really, once I saw the first distribution, I'm like, okay, this is really, really nice. So UTES is basically a Canadian utilities, a mix of the utilities. So you have 4 electricity companies, Emera, Fortis, Hydro, and AltaGas. You got the 3 big telecoms, Bell, Telus, Rogers, and you also have some pipelines, Enbridge, TC Energy, Pembina Pipeline. So it really makes a good complement to ENCL, in my opinion, because ENCL is just oil and gas producers. You see them there, and the pipelines. So, of course, there is a little bit of overlap. There's about 30% overlap between UTES and ENCL because Enbridge, TC Energy, and Pembina Pipeline are also in ENCL. But I really like the fact that I wanted to get Bell, Telus, Rogers, and some electricity generators. And also, I really like Bank. Bank is Evolve's original leverage covered call ETF, 60.6% management fee, cover calls up to 33% of the portfolio, and 25% leverage. It's really working well. So they launched UTES, which has similar characteristics. Same management fee, same leverage, same covered call ratio, and about the same yield. So very nice complement to ENCL and Bank. So I feel like with these three, I kind of have the overall Canadian market. But of course, if you don't feel like doing this kind of sector picking, you could go with HDIV, you could go with CNCL. which is basically like the TSX 60. But I decided, you know what, for Canada, I'm going to go a little bit more concentrated and really get these high yields, which has been working out well. So yeah, moving on. RS on a tear, REITs on a tear, not rocket science. Why? I knew this was going to happen. I'm very, very happy about this. So all of a sudden, instead of being down 20, 30,000, I'm only down a couple of thousand. Now you see my book price 1363, and RS is almost recovered to 1363. But this is just capital, guys. This is just capital. I went back the other day. I think I've made about $30,000 in dividends, which is not counted here in the capital, over the year. So I'm very, very happy. I kept adding more and more and more into RS. I think RS has more to go, more to recover. It's merging with another fund. I think that the meeting to approve the merger is actually today, September 24th. I'm sure it's going to get approved, and it's going to merge with another Middlefield closed-end fund in December. So I think I'll probably hold on to it in December. I think it's just going to keep going up and up. This is REITs, guys, with leverage. They're not even writing covered calls. So this is pretty much more of a growth investment. And but my long term, my final intention really is to sell it, not because I don't like it, I absolutely love it, but for specific tax residents only related to a non-resident. I've spoken about in previous videos. I'm not going to go over it now, but needless to say, I could see RS going to $15-16 and me selling it, and not only getting 35,000 of income over the years, but also realizing a $25,000 capital gain. I have 12,500 shares. So if this goes to, let's say, 1463 and I sell it, that's $12,500 of capital gain. If it goes to 1563, $25,000 of capital gain. So I can't wait. And yeah, I'm just holding on to RS because, hey, I'm not going to complain about an 11.45% yield either way. But my intention is to sell it down the line. So there you have it. You have Bank UTES ENCL as my primary Canadian exposure. And then the rest is really like smaller stuff, funner stuff. So you have HPYT at 15K doing fine. I just wish it had leverage on it. No leverage on it. I think it's literally the only thing in my portfolio it's the only thing in my portfolio besides the crypto ETFs that does not have leverage. Everything else does. Single stock ETFs, YTSL, which is Tesla. I'm up like 15-20%, and in terms of capital, making a 21% yield. I wouldn't be surprised if they raise their dividend again back to like 35 cents. Hopefully, super happy with this one. Obviously, it's a lot higher risk, guys, because it's Tesla. But honestly, I have to say, I invested in Tesla, not really because I believe in the company and the cars or whatever. I think they're nice cars. But honestly, it's really because I'm a fan of Elon Musk. I have to admit that. So I see myself maybe adding more. Oh, you know what? I forgot to take out my picture. Sorry about that, guys. So hopefully you could see everything. Hopefully I wasn't blocking anything here in the retirement accounts. I keep forgetting. But anyway, going back to YTSL, very happy with this investment. And when it comes to the single stock covered call ETFs, I'll probably add only more if I'm down 5-10% on them. Speaking of which, we got our new addition, the NVIDIA one from Harvest. I love it because, my favorite style is with leverage. So NVIDIA with 25% leverage, cover calls on up to 50% of the portfolio. Very similar style, very similar strategy to Purpose. And check out this magnificent yield, this crazy yield of over 25%. So NVIDIA popped today. I think I'm actually up on this. So you got it. Watch my video where I talked about the rise of single stock covered call ETFs. These are going to be more risky, guys, and most likely you will have to do more management on these. But these will never be core or primary positions. You can see how the smaller percentage. The YTSL is pretty sizable at 2.97% of my portfolio, but I think with times, as I keep adding to my main positions, my core positions, the percentage goes down, right? So I'm thinking of also adding the other ones from Harvest, to be honest with you, the Eli Lilly one, Microsoft, Amazon, all companies I love, all very, very nice yields. We'll see what happens. And then I have the crypto ETFs, which have gone down, especially the Ethereum, but they're on the way back up now. No change in dividend. I will probably always keep about 5% in Bitcoin. So BTCY.B is my Bitcoin position. And then you have Ethereum, my Ethereum position, which I only have 1.69% of the portfolio. And I'll probably trim it a little bit. If it keeps going back up, I see myself trimming it to 15K at about 1.5%, and maybe later on, if I break even, to 10K, and I'll just leave it and wait it out. So that is it, guys, in terms of portfolio review, the moves that I did. Oh, and by the way, I forgot to mention Webull, by the way, and they're not paying me to do this, say this. They're not a sponsor or anything, but I feel like they really have a really cool entry or welcome bonus where all you have to do is open an account, deposit $2,000 or more, and hold it for 90 days, hold it for 3 months, and you'll get $100 cash for free. That's absolutely incredible. You could actually see the steps here. The promotion ends very soon on October 10th. So again, if you're interested in a new broker or you just want to get a free $100, my advice, just open a non-registered cash account, deposit $2,000, hold it for 90 days. And by the way, even if you don't even buy anything or invest anything, you'll get 3%. It looks like interest on that $2,000. And at the end of 3 months, you'll get a free $100. So the link is in the video description below as well. So I just wanted to point that out. Again, they're not paying me. I just figured this is a really cool deal. Very easy way to get a free $100. I would pretty much do it myself, but I can't because I'm a non-resident anymore, and this is Webull Canada, so it would be too complicated for me. But anyway, let's go back to the portfolio totals now, everyone. So as you saw, current portfolio value is about $1,040,000. And where do I get that? It's in passive. So you just click on main portfolio, which has the 3 accounts connected, and you get the amount here. I'll just refresh it to show you what it is now. Let's see. Okay, so it's a little bit higher, 1,044,000. Let's see. Yeah, it's 1,044,000 here. So I put 1,040,000, so it's actually a little bit higher. So anyway, doing really, really well. My average yield is over 13.5% yield now. Gross annual income, gross monthly income. This is my 25%. So as a non-resident in Canada, I pay 25% withholding tax on all my dividends in the non-registered account. So that's what it is here. But I do get the ROC and capital gains portion refunded the following year. So my expected or approximate refund is $1,691 here. So my monthly income net after taxes is about $10,960 now. I actually am tracking. I also started tracking my monthly income now as well. I thought it would be fun, and you could see the portion, from this monthly income, this $10,960, how much is coming from the TFSA versus the cash account. So, and you got the totals here, right? These are just the realized totals, which I'm tracking every single year. If you scroll to the left, you'll see my realized annual returns, every single keyword realized, right? So if you scroll down to 2024 so far, I realized 18,383 of capital losses. I've realized, or I've accumulated, or I've received almost $100,000 of income. So you see it's a net positive of 73,900 right now, but the year is not done. We still got 3 months to go, right? So I do expect to get about 120 grand, something like that, in income. But hey, hopefully maybe RS will go to 1563 by end of the year. I'll sell it, make $25,000 of capital gains, and it'll offset this 18,000. We could only hope, but either way, it's all good. You got to calculate the income and the capital as well. So over the years, I've received now almost $400,000 of income. I've realized $96,000 of capital gains, right? This is just this number here all added up because some years I've made actually capital gains, especially in 2021, I made 25,000. Here I made 6,000. Here I'm minus 34,000. So you add it all up and I'm actually in the green. I'm in the green almost 100,000. So total profit, which is capital gains realized, income realized, basically these two numbers together is just under 500,000. And this is just my current portfolio value, which is this number here, plus this number. And I'm basically simulating this cumulative total return. If I sell my entire portfolio off today, what would be my cumulative return? That's what I'm simulating here. So very happy with this portfolio, guys. If I could be more or less broken even in terms of capital and get a over 13.5% yield, think about that. My annual return is basically my yield, right? Which is over 13.5%. So I'm very, very happy with what's happening here with this portfolio. I will keep adding and keep going and definitely be an income investor for life. So hopefully I didn't forget anything, guys. That's it. Again, a reminder to download the Blossom app, or a reminder of Webull's very cool special offer ending in a few weeks. And a reminder to go on my website and download this sheet for free. If you want to track my portfolio on a month-to-month basis, you just download them and store them if you want. Some people have asked me for the historic ones. I'm only going to put the latest one on my website, but if you want, you could just download them and store them yourself so you could actually see my progress throughout the years as well. So we're going to do this again next month again. Episode or update 41. If you have any questions, let me know, and see you next time. Hey, don't go yet. A few reminders before you leave. Did you know that I launched a YouTube loyalty membership program where for only $3 a month, you could become a PII Inner Circle member, where you will gain access to exclusive content, exclusive videos and live streams, as well as other perks and benefits, including a really cool weekly opportunity report. That's right. If you're interested, just click on the little join button next to the subscribe button to see what it's all about. Also, make sure to follow me on Blossom and download Blossom. It's a social investing app, which is really cool. You could share your portfolio, follow other people's portfolios, including my own. My username is Adrian_PII. So download it with the referral link below. Not only is it free, but you could actually earn cash by taking these really small, quick 1-minute courses. Really awesome. It's a no-brainer. Also, make sure to visit our website, passiveincomeinvesting.ca. That's where you could book a one-on-one private coaching session with yours truly, with myself, where you could ask me all the questions you want. All the information and booking information is on the website. Make sure to check out that video on the homepage there to see how to book a one-on-one properly. Also on my website, you could purchase my digital product, which I'm very proud of, the ultimate DIY investing package. This is a reference tool or a companion tool that will help you build your own portfolio. So it has lists of funds, it has sample portfolios, and it covers both the Canadian and U.S. stock markets. And the good news is you'll only ever have to buy it once because it comes with free lifetime updates. And my plan is really to update the version every single year. So make sure to pick it up. Also, I have Questrade and PASSIV referral links below. So Questrade is the broker that I personally use, and PASSIV is the broker companion tool or assistant that I use. Really cool program, really cool software. So I have referral links for both of those. Questrade, $50 of free trades. And PASSIV, I have half off for the elite membership. If you're interested in the elite membership, and even if you want to start out with the free membership and upgrade to the elite afterwards, use my referral code so you could still get that 50% off. And don't forget that the elite membership of PASSIV is 100% free if you use Questrade. For social media, we have a very successful and big Facebook group, private Facebook group with over 14,000 members, where we all try to help each other out. So make sure to join that group. Information is below. We also have Instagram, where you could follow us, or more personal stuff when it comes to our life here in Panama. And there's LinkedIn as well. So as usual, everyone, how do I leave you? Continue to stay safe, stay healthy, and of course, stay passive. See you next time.